Start. Good afternoon, everybody. My name is Luke Morris. I'm a partner at Scruton Bland, and it's a great pleasure to welcome you, everybody, to our latest Advisor Live webinar. Now, hopefully, as most of you will know, I hope you've been attending these webinars. You will know what we're trying to do with these is something that's kind of between a webinar, a podcast, a bit of a training session. We want these sessions to be short and sweet and interactive. We have a few people on the call as always, so we have muted microphones, and what we ask is that you do contribute to the discussion, but you do it via the chat box, which should be on the right hand side of your window. Now, we're fortunate today to have my colleague and tax partner, Jason Fairs, working with me today to address any questions, queries that might come up in real time as they come in. What we want to achieve with these sessions is something content that's relevant, easy to digest, engaging, quick to sort of pick up, and hopefully giving you some tidbits and nuggets as things are happening so quickly and moving so quickly in real time. We've set ourselves 3 ground rules, so we're doing them at least weekly at the moment, or even more frequently where events dictate. We've set so we don't take any more than 30 minutes, and the session today is really an update on previous sessions. So I think we'll probably be done in about 20 minutes or so. It's not going to be a particularly long session today. We want them to be as collaborative as possible. So we want you to raise your questions. That's helpful for us. We want to help you, giving you some answers, but also it's helpful for us because it gives us a sense as to what our clients and professional contacts and friends and colleagues are thinking about some of these changes that are happening at the moment. So do please ask questions as we go through. We hope you find it useful, and we welcome all feedback, all and any feedback, to our email address, which is hello@scrutonbland.co.uk. But as for now, let's get on with today's subject, all subjects really, because what I'm going to tackle today, I've called on my first slide CJRS and SEISS Take 2, because we've already had sessions on the Employment Income Support Scheme and the Coronavirus Job Retention Scheme, or furloughing as we tend to call it. We've already done sessions on those, but what we haven't done is an update really on the back of what the Chancellor said last Friday. And I think it's probably quite important that we consider the overwhelming political context to all of this first, to try and put it into some sort of context for you. And my fear with a lot of this is it all feels rather uncertain and rather negative at the moment. So the Chancellor stood up last Friday, and what he did, he really sort of acknowledged the economic reality when he announced that the furlough scheme will be rolled back. But far from a sort of short, sharp shock that we might have been expecting, he basically announced plans to suggest that the scheme would be rolled back gradually over the next 5 months. So what's going to happen is that the government's going to continue to pay 80% of furloughed staff salaries, capped at this £2,500 for June and for July. But come August, employers are going to be asked to pay the national insurance and pension contributions, which, roughly speaking, are something like 5% of total employment costs. In September, employers will be asked to increase their contributions to salaries to 10%. And then in October, that will rise to 20% before the scheme eventually comes to a close at the end of the month on Halloween. So you can see that the next sort of 4 or 5 months, June and July are the same. That's sort of presented on the slide there. At the beginning of May, when Rishi took to the podium for the daily press conference, he got us a bit by surprise by, I think, being far more generous in extending the furlough scheme than we were expecting. So when he took to the stage again last Friday to flesh out the detail, still generous, but in a bit more of a nuanced way. And that's kind of what that table summarises. A gradual rollback, really the most the Treasury could offer, whilst it's balancing the financial realities that, you know, this furlough scheme can't go on forever. I was reading a report by the Institute of Fiscal Studies, who suggest that this scheme is now costing upwards of £100 billion on its own. Every month, it's racking up the same amount of spending as we spend as a country on the NHS. So, you know, this is not something that could keep on forever. And indeed, if you listen to some of our first advisor lives that we did, we kind of predicted that. We predicted that I think I said at the time, this thing's going to cost as much as HS2. So there's your £100 billion. And that prediction, according to the Institute for Fiscal Studies, is pretty much data now. So that's why it's being rolled back a little bit. The politics of the Self-Employment Income Support Scheme. There were calls, cross-party MPs, to further extend support to the self-employed, and Rishi Sunak has heard those and he has acted on those, offering what he's referred to as a second and last round of grant application, which will be open in August, to basically cover 3 more months of average profit, albeit reduced and capped. So that's going down from 80% to 70%. But what I was thinking, you know, the Chancellor has sort of decided to gingerly tiptoe out of the furlough scheme. And this kind of really reflects, I think, a nervousness that unemployment is set to spike. Even minor changes we're going to see over the coming 5 months to the scheme will inevitably result in job losses. There was another survey that was done recently by the Institute of Directors. Basically, that said that about 25% of all businesses didn't feel they could afford to contribute anything to furloughed employees' wages. So, you know, we're looking ahead to fairly tough decisions for businesses before October, when this scheme officially comes to an end. And in August, when businesses are asked to contribute even relatively modest amounts, relatively modest percentages to wages, it's going to be difficult choices. The future feels pretty bleak. At the moment, looking at the data, we have 8.4 million people who have already been furloughed across the country, and 2.3 million further people, self-employed people, have applied successfully for one of the government grants, the SEISS grants, and there's another wave of those to come in August. So that's the general picture is one of a fairly big economic contraction, possibly the biggest since the Great Depression when you look at the numbers. And whilst the furlough scheme has gone along with a number of the other grants and schemes available that we've been talking about over the past few weeks, it's shielded some people from feeling the worst of the effects of recession immediately. The pain is inevitably going to start setting in over the next 5 months as the UK starts to wake up to the devastation caused by COVID-19, and it's to become clearer. So, you know, it's pretty uncertain times that we're facing at the moment. So some more prosaic accounting detail, and I think it might be helpful if I just have go through a bit of a recap as to what this is all about, where we are and where we are going with what we're calling CJRS version 2. We're aware that coronavirus job retention scheme is the flagship support measure. You know, it's cost £100 billion, and many of you will already be taking advantage of grants which cover 80% of salaries of furloughed staff. You're taking those up. Last Friday, Rishi stood up and he outlined the government's plans as to how it's going to exit and reshape the scheme from the 1st of July to encourage those people who are furloughed back into work. And I suppose the flagship bits of that announcement were that furloughed employees will be allowed to come back to work on a flexible part-time basis. And as we've seen, employers will be covering the costs of the working hours of part furloughed staff and making additional contributions. Now, to make a claim under version 2 of this scheme, employers need to have submitted a claim under the existing version of the scheme before the 1st of July. And importantly, only employees who were included in claims in the first iteration of the scheme are eligible for furlough under the second version of the scheme. Because of the 3-week thing, this means effectively that employees must have started their furlough by the 10th of June if they're new employees going into it. Now, as of the 1st of July, there'll also be a maximum number of employees that can be claimed for. And this is basically the maximum number on any single claim under of the scheme. As with all of these things, the devil very much in the detail, and you can see that HMRC have announced that they hope to publish detailed guidance on the of June. But for now, as I say, it might be useful just to recap through what we do know. So apologies if some of this is basic stuff, but I think it's probably worth bearing with me and just going over it briefly again. Who can claim? Any employer with a UK PAY scheme and a UK bank account is eligible to claim under the furlough provision. How much can be claimed? Well, as I set out on that first slide, we have a grant of 80% of furloughed employees' pay up to a maximum of £2,500 per month, plus employees' national insurance and auto-enrolled pension contributions. That can be claimed up to the end of July. For employees on a regular salary, it's pretty straightforward. The grant is based on gross salary in the last pay period before the 19th of March. If the employee has not been paid the full period up to the 19th of March, then you have a pro rata calculation to do. And if you have a situation on variable pay, we had lots of questions on variable pay considerations last time, then you need to look at the average of if the same month's earnings from the previous year and the average monthly earnings for the tax year 1920. If the employee has been employed for less than 12 months, then you look at the average monthly earnings since they started work. There's lots of questions again last time around discretionary payments and bonuses and things like that. And the key thing here is if there is no contractual obligation on the employer, then the general rule is that that cannot be included when calculating the grant. How long does the scheme run? Well, as we've seen, it started effective date 1st of March 2020, and it now will run up to the 30th of October 2020. And as we've set it out on the first slide, how the scheme will change after the end of July. From August, employers currently using the scheme will have a bit more flexibility to bring furloughed employees back into work part-time while still receiving support from the scheme. So this revised scheme, this CJRS version 2, it will run for those 3 months from August through to the end of October. Employers will be asked to pay a percentage towards salaries of their furloughed staff, as we set out. The employer payments essentially substitute the contribution that the government is currently making. All of their literature talks about the government making contributions. I must confess, I do prefer to say the taxpayer, because of course government has no money of its own. So ultimately this will fall on the shoulders of the taxpayer. But what's happening is the employer will have to make up the contributions so that it gets to the 80% up to the £2,500 per month. Which employers can be claimed for? Basically, employees who are on the payroll, so an RTI report as at that date, the 19th of March, and have been put on furlough. And it's quite wide in terms of who can be included. There were questions last time about domestic employees, nannies, company directors, agency workers, zero-hour contract type staff, foreign nationals. That can include all of those people. What's relevant is they're on the payroll on an RTI report. Now, it's worth just revisiting what the word furlough actually means. It's quite an inflexible term, and it's still the case that employees on furlough cannot do any work for the organisation. And actually, the Treasury set out further direction on this around training activities. They said that the training activities an employee can undertake while on furlough must not provide service to the employer, nor can they contribute to business activities or generate income or profits for the employer. They must, however, be relevant to the employee's employment. So it's quite narrow. Employees can continue or start to work voluntarily for non-connected organisations. So there's quite a bit around people volunteering for the NHS and so forth. How much do I have to pay employee? Usual rules apply here. The employee must be paid in accordance with their employment contract, which of course can be amended by mutual agreement, and they retain their usual rights at work. The employee be paid at least the gross element of the grant received from HMRC, but remember that the grant is based on the pay in the base period, so won't necessarily match whatever the gross pay is. The minimum wage rules do not apply when an employee is on furlough, other than in respect of hours when they are undertaking training. When will grants be paid? Well, in our experience, we're seeing payment of grants made within 6 days of claims being submitted, but sometimes sooner. And the final point there around deadlines and how long. So deadlines for claims, there's currently no deadline for claims. However, it is advisable to make claims promptly because of these changes with effect from the 1st of August. And that key date of the 10th of to be borne in mind as well, as we've set out above. The period of furlough to obtain the grant. Well, of course, you can furlough somebody for half an hour if you want, but if you do, you won't get any money back from the government. The 3-week minimum, that's still there as a criteria, albeit it can be extended. I've put some key dates up on this slide. A number of those don't actually change. Obviously, it's with effect from the 1st of March. We had that announcement early May when the Chancellor seemed fairly generous in extending this to the end of October, but he clarified last Friday that the rules change after the 31st of July. Still the case that employees need to be on the payroll as at the 19th of March. And importantly, to get on this version 2, it's effectively the 10th of June when you need to be putting employees who are new to furlough onto furlough, because they have to be alumni of version 1 to get version 2. The portal opened on the 20th of April. Finally, some quick reminders on the self-employment income support scheme. So this is not for employed individuals like furlough. This is for those who are self-employed. Government figures set out so far state that as of midnight on the 24th of May, 2.3 million claims had been made, with a total of £6.8 billion being drawn down. It was a very straightforward process and system. The eligibility essentially pertains to self-employed individuals, including members of partnerships, if They submitted their income tax self-assessment return for the year 2019, which of course they should have done anyway. If they continue to trade in 19 and 20 and intend to continue trading into 2021, if they carry on trade which has been adversely affected by COVID-19, and that seems to be a catch-all criteria for a catch-all self-assessment criteria for a lot of these government support schemes, and if they have average self-employed trading profits of no more than £50,000. Now, if you're in receipt of this grant, you can continue to work or start a new trade or take other employment, including voluntary employment, and actually the government guidance talks about being armed forces reservists as well. The first grants, we've seen the first grants have been claimed by self-employed individuals. Interestingly, agents like us are not permitted to do those claims on such clients' behalves, but it's pretty straightforward. It kind of requires a government gateway account, a national insurance number, and a unique taxpayer reference number. If you have that information, you kind of plug that in, and HMRC calculate what your eligibility is and what your amount is. But the first grant basically was 80% of average monthly trading profits paid out as a single chunk, covering 3 months worth of profit and capped at £7,500 in total. And that opened on the 13th of May. A number of our contacts went through this process and got the money pretty quickly. Applications for the first grant close on the 13th of July, so that's the key date there. As I said at the outset, Rishi Sunak had come under a lot of political pressure to do more for self-employed individuals, as he was making announcements extending the furlough provisions. He was under pressure to do more for self-employed individuals as well. So that's what he announced last Friday, a second, and as he put it, final grant. The eligibility criteria that I set out a moment ago, they are the same. The difference is that this time the grant is worth 70% of average monthly trading profits as opposed to 80%, but similarly will be paid out in a single instalment covering 3 months worth of profit, capped this time at £6,570 in total. Interestingly, you don't have to have claimed the first grant to be eligible for the second grant. You can claim both. You can claim just the first one. You don't have to be, you don't have to have done the first one to get the second one. They're sort of two standalone things. Eligibility criteria remain the same, with this provision around being adversely affected by COVID. And we are told that applications for this second and final grant will open in August 2020. And we are told as well that further information will be put up online on the gov.uk website next week on the 12th of June. So that's where you need to go if you would like more details. As I say, agents are not permitted to do the claim for you as a self-employed individual, but we are talking informally and obviously fielding questions from a lot of our self-employed clients and helping them sort of with their thought processes and helping them to walk through that process. We're 25 minutes in. I told you it'd be about 20 minutes. That's about covering what I wanted to talk about in terms of those key updates from last Friday. I would like to encourage you to continue to stay up to date with us. I've put the slide up there showing where our website is, which we are keeping obviously a very close eye on all of these developments and posting as and when rises. So do put it on your bookmarks and do keep coming back to the website. You can subscribe to our emails via the website and do follow us and register for notifications with our social media channels, because we make sure all of our content is put out through LinkedIn, Twitter, Facebook, Instagram and YouTube. So do follow us on those channels. Submitting them. I haven't really been keeping an eye on things, so hopefully Jason has been keeping a good eye on things as we've been going through. If you do have any further follow-up questions, you can reach us anytime. The email there is hello@scruttonbland.co.uk and the number 0330 058 6559. So do get in touch, do keep in touch with us, share with us your experiences, share with us your question. As I say, it's helpful for us to know what our clients, what our business community are feeling at this time, what sort of challenges and issues that they are facing. But all I have to say from now is thank you very much.